Welcome to Rich Keys Trading Channel, where we unlock one candle at a time. Please pay attention to the disclaimer on your screen. And with that out of the way, let's get into the charts. Welcome back, traders. Today is the 7th of September 2025. Time is about 8:11 a.m. It's a Sunday, New York time, and I want to analyze the equities. Usually, we look at the NASDAQ, the XPX, and we also look at gold. If time permits, I might look at one or two stocks that I am looking at and share my perspective on it as well. But let's Nasdaq 100. It's on the weekly chart. Is still doing its uptrend from the sell-off that we had in somewhere around April, and we've bounced up to a new all-time high. Now, what I'm expecting in the next coming week, as we analyzed from last week, is that I don't expect this to continue from here with ease, as it has already done, in my opinion, a five-wave pattern. And I think this is probably the end of the five-wave pattern that began all the way from the pullback of 16,000 to the high of almost 23,986. What I'm looking for this week, as we bounced off the 9 period moving average, as we discussed from last week, is that we're going to continue this distribution zone. The market has done an incredible move, and the market makers aren't just going to pull the rag like that. They would have to get liquidity for the next move on the NASDAQ. And in my opinion, this is going to go sideways in the next week as well, particularly as we had an indecision candle after a hanging man confirmation. But obviously, we did not close higher than the all time high. So we haven't really advanced any more than, um, of course, yes, do we close above last week's closing? Absolutely. But we really haven't advanced as in making it another high. So we're just going sideways with the resistance still in place. Now, indicators wise, if you look at your cycle is still showing weakness. Okay, that stochastic is still showing weakness. MACD is already still below the zero line on our histogram bars. MACD signal line is also MACD is also crossed the signal line officially, and we're still below the signal line, which is the yellow line. So that still tells me, even on the weekly, that momentum is still to the downside. Now, of course, anytime this changes, I will change my bias as well. But until then, I go with what is before me. Stepping down to the daily chart briefly, and our daily MACD that came up is also showing weakness. Um, RSI is just around the 50, supporting the consolidation idea that will go sideways. Now, if you look on your chart itself, you would realize that on Friday, okay, even though we went above the highs of the last couple of weeks, we did not sustain. We just went right to the resistance level and sold off with an indecision candle from Friday. So Friday's candle, in my opinion, this is a pure sideways market makers move. They move price all the way up, liquidate, move price all the way down, liquidate, and they close right about where you started from on Thursday, which is right about where this price zone has been since last week. Pretty much, yeah, last week Thursday. This is the high we've made, and we're still hanging around here. So I still expect this sideways consolidation to play out for a while, maybe probably until the end of this week, and then we might be able to build up strength to break below to the next target zone. Stepping into our 4 hour time frame, you could still see our sideways support zone is somewhere right here. Okay, and our resistance zone is right about here. So I expect price to kind of play within this zone for a little longer, and at some point I think we're going to break this support zone and make our way down to our price target, which is about 22,800. So that's my thesis on the Nasdaq. Indicators on 4 hours is supporting the idea. We have a cycle turn down, RSI hitting the above 70 zone, now has come to the 50 zone. And I think at this 50 zone, we're going to get a slight bounce in this coming week. And then we'll probably make our way down potentially to a target of 23,310, which will be the 200 period average on 4 hours. So that's my analysis on the NASDAQ 100 in the next coming week. I am not super bullish on the NASDAQ. Neither am I calling that it's going to be a complete meltdown or sell off. These things don't happen quickly like that, especially after a good rally from the April lows. Now, quickly, I also want us to look at XPX, and then we shall also look at gold. So with XPX 500, our analysis from last week was that we bounced off this target that we had, and we made it back to the liquidity zone as I was projecting. So that one played out perfectly. Now this week, I'm expecting that this liquidity zone sells down. So this is my bias this week on XPX, that we do make a pullback from this level all the way back down um, into this area again, 64.40. Still in the consolidation zone based on the 4 hours. Look at briefly our indicators. Our indicator is very similar to what happened on the NASDAQ 100. So here again, we have our little bounce of a big sell-off on the 4 hours. And I think it's just going to bring itself, because, look at the volume. The volume that sold, this is pure liquidity move. Like I said, they'll push price up to the liquidity zone, but look at the volume that sold off, all right? So here again, it tells me that the smart money is offloading their longs gradually, and I think that's going to play out in the next coming week as well. Right, step down to the daily, and the daily is still telling us the same story. We really went slightly above the previous high, but you could see the rejection as we were projecting from last week, that this liquidity zone would definitely be attractive to the market makers. Definitely I expect a consolidation still within the zone of 64.74 to about 64.24. That's my projection for this coming week. And then at some point, we're going to break the 21 period moving average, and we'll probably be making our target to somewhere around 63.48. On the weekly, the story is very similar to, again, the NASDAQ 100, where we have an indecision candle from last week. And this week we get in kind of another bullish indecision candle, where your wig went all the way up to this level, liquidity zone, and came all the way down here. So I expect this to continue to play out as our momentum on the weekly is still down. We don't have MACD crossing yet, and also our histogram bars on MACD is still pointing downwards, suggesting that there's no momentum to the upside. Therefore, most of the moves upside is all going to be like a fake out. There's no strength behind it. RSI wise, divergence is still in play. This is your previous RSI. You've made a higher high. RSI is still hovering around 74. I guess the market is just waiting for a catalyst to move it down. But until then, it's just probably going to go sideways until we get that catalyst. Briefly, let's look at gold and see what gold is also looking at. All right, and gold worked out beautifully as we were expecting a breakout to finally make its way up to the upside. And this is a clean breakout of this whole consolidation that has been in a place since April until right about August 25th. This is a clean breakout. There's no question about it. When you get a solid green candle on the weekly that closes above the all-time yeah, that breaks above the all-time resistance and closes above it, that's not a bearish signal at all, and you have good volume supporting it as well. So this is not like on a low volume. So this is a clean breakout. Usually once you get this breakout, the next thing you want to look at is whether there's going to be a pullback to retest the breakout zone. Stepping down to the daily chart, there isn't really much to look out on the weekly, as it's just a breakout on the weekly. Now, if you come to the daily chart, you would also observe that we did a pullback pullback was quickly absorbed, quickly bought, and we pushed to another high on the daily chart. So again, we've made a higher high on the daily from the sell-off or the pullback level. Now, usually when you get price outside the KC channel for maybe a little longer, you would probably have a pullback. But for now, there's no signal on my chart that says a pullback is imminent, as in terms of a pushback inside the KC band itself. So, and gold has been having this pattern where it stays outside the KC band sometimes for lengthy periods. If you look here, we went outside the KC band and we're outside the KC band for who knows how many days, several days before we pulled back into the band. So I'm not expecting a major pullback from this level yet. And if there is, if you get any pullback, my pullback zone is right about here, as I've noted here. So this is my first level of a pullback if we should get it, and that has already occurred. Now I don't know whether we're going to get a much stronger pullback to this level, which is the 9-day period moving average. And so if you do get a pullback, this is probably where I'll be looking for support and probably a reload of longs. Going to the 4 hours, we're going over our 10 minutes time limit. And I think on the 4 hours, we already seen the pullback that I'm talking about, and potentially this pullback may make its way probably to the 35.69 zone. That's very possible. But if you get it, it's an opportunity to look for the long side rather than the short side, as buyers on the higher time frame is to the long side. So I think, in brief, I'm bullish on gold. I think gold will continue to go higher, and every pullback is an opportunity to buy some more. So in conclusion, sideways potential liquidations on Nasdaq and XPS, and some pullback on gold for a reload is my thesis on the equities this week. I thank you for spending your time and listening to the analysis. Have a great trading week. Cheers.